Let's start with the tech titans. TCS, Infosys, HCL Tech and Wipro saw margins improve in the December quarter, and most of them seemed more confident of growth. Darshan is standing by to compare and contrast these earnings. Darshan, good morning. Top four out of the way, Tech Mahindra only one left. What is it that you derive as trends or differences? What stood out?
Yeah, so Tech Mahindra will come out on the fag end. So these are the four ones. I think the consensus is that numbers haven't been bad for the IT companies. Obviously, some key verticals there will be pressure, some key markets there will be pressure. But overall, the commentary is good from most of the companies, and the margin improvement is definitely seen. Now, if you're looking at the revenue growth that happened in terms of dollar revenue growth that came in, Wipro will be the IT services revenue. You could clearly see that HCL Tech did manage to outperform 2.3% revenue growth on a QOQ basis. Then it was Wipro, Infosys and TCS. So all of them coming out with the revenue numbers. HCL Tech actually going ahead and increasing the guidance on the lower end of the revenue guidance. So most of them actually met estimates on that front. Now, if you're looking at the margins were much better. TCS this time around 100 basis point improvement in margin. Infosys, HCL Tech and Wipro, all of them seeing margin improvement. So that was one key theme that you needed to watch out for. Margins, all of them improved despite being a weak quarter. There are very high furloughs in this quarter, and despite that, most of the companies have managed to come out with better margins. Now, what's the outlook like? They are optimistic of an 8% revenue growth for FY20. No doubt it was 11% in FY19, and the aspired margin range is 26 to 28%, despite having it coming in at 25%. So despite an inline set of numbers, the outlook that the management gave outlook of TCS management was rather positive. Infosys did manage to react very positively to the numbers. They was the first company to raise the guidance there. So they've revised the revenue guidance to 10 to 10.5% from the earlier 9 to 10%. Remember, the stock did manage to come much better. They maintained the 21 to 23% operating margin. So here also TCS has a much better margin guidance that they've given compared to Infosys. HCL Tech probably will react positively. They haven't raised the upper end of the guidance, but for both of them, they've raised the lower band of the guidance, both on the revenue front and the operating margin front. But the numbers, no doubt, were positive for HCL Tech. And finally, if you're looking at Wipro, they were the only one that was cautious, because their revenue guidance indicates that revenue growth will be anywhere between 0 to 2% on a sequential basis, and that is why the stock did manage to react slightly in the negative. So that's the guidance that's coming in. Two key points we want to watch out for: the North American market and the BFSI vertical. Here is where, if you're looking at the growth, HCL Tech, almost 22% of the revenue comes in from there, and they had a massive 16%, 17% growth that came in. So that's the big positive on a year-on-year basis. TCS, Infosys having almost 5 to 6%, and again, Wipro was somewhat a little bit of a cautious view that came in. Now, if you're looking at the other one, that is the American market, and that is also very, very important. Here also, HCL Tech did manage to grow 13% on a year-on-year basis, and that is where majority of the revenues. And if you're looking at the revenue contribution, more than 50% revenues for all of them come in from the American market, and that is where Infosys and HCL Tech did manage to come. TCS, no doubt, given the base, growth was just 4%. The other aspects that we want to look at is what are analysts saying now. Now, TCS is the only one in which the return potential is negative, given the fact that the growth somehow was slightly sluggish and valuations are extremely expensive. So all the reports that I read through did indicate that they believed that TCS is a great company, there is great potential to grow, but the valuation at 26 times keeps them cautious. Infosys has already reacted much positively, so there is a still potential of 9% that is to go even post the rally that's coming. But remember, Infosys has corrected also massively post all the whistleblower issue that came out. HCL Tech, I think consensus, most of the brokerages have raised the target price on HCL Tech. The return potential is 4%, and with most of the returns that are coming in, that will actually move up. And Wipro, the return potential is 2%, not too much of a buy rating coming in. So that's the view that's coming in. So Infosys and HCL Tech probably the stocks to watch out from the IT pack now.
Very interesting. Darshan, just wondering, in the commentary as well that the companies have put out, our headline also stated that Wipro and HCL Tech have raised the lower end of the guidance a bit. And when I look at all you need to know copy today, it seems that all brokerages across the board have raised the target price on consensus on HCL Tech and have expressed concerns about the valuations of TCS.
Yeah, so that is there. So I pointed out. So TCS, I think everyone said that, I think quite a few companies or brokerages also have a negative view that's coming in on TCS. So and the reason that they're saying is that the valuations are expensive. If you're looking at the valuation, this is 26 times, which is expensive. And with Infosys and HCL Tech also growing at a similar pace, you're getting them at cheaper valuation. HCL Tech across the board, a consensus target price raise that has come in. So the potential for there is much more potential for HCL Tech at that point of time.
Yeah, well, let's wait and watch. Today could be an interesting day for this one too. Darshan, thanks so much for putting that into perspective.